Of a 2 hour backtesting session, I found five potential trades that I could have taken. I decided to make a slight backtesting protocol change. So I'm no longer going to incorporate news, bias, or sessions in my backtesting just because it's super hard to try to get everything to align with the sessions, the news, and go back and find the news during the particular trade and to find the daily bias. And it's just a lot easier to just focus on the general structure of market, which is really what backtesting is for. So, and then I also decided to make a slight strategy adjustment with fair value gaps, which you'll see soon. And because I'm on TradingView free instead of TradingView premium, I really can't see many fair value gaps are very difficult for me. It's always been something I've kind of struggled with, and I decided that I'm gonna make them optional, so I don't have to have them in order to take a trade. If I don't have them, I'll be more likely to take a 0.5% trade instead of 1%, but I'm just not gonna have them. Trade I found back testing. Pretty much, this one's pretty standard. We have a liquidity sweep plus a break of structure to the upside. And then if I go into the 1 minute here, it'll become a lot more apparent. This was something else lost, but here price goes down into this order block. It comes up and then it comes back down into this order block area, which is also within equilibrium. So it breaks structure and then it breaks structure to the upside after the liquidity sweep. It officially breaks structure right here. I believe it takes out this high. So then it breaks structure right here. So it would probably long it. The one thing is this is really the only high, and there really are no other previous areas of liquidity for a long time. So I would just probably have a fixed 1 to 1.5 risk to reward ratio, which seems to work pretty well for me. And because there's no clear target for liquidity and no apparent fair value gap, um, I suppose there could be one here on the right time frame if I adjusted it, but I don't see a fair value gap, so this would be a 0.5% risk trade. Um, second trade I took was similar. It was just to the downside, and on a 30, this would have been a 30-minute trade. So it's on a bit of a downtrend as you can see, and then there's a up to the upside, and then price comes down. Pretty much the same thing. It taps back into this order block, which is also within equilibrium. So it's liquidity sweep, break of or bias in terms of trend, liquidity sweep, break of structure, equilibrium, order block. Then I'm just waiting for a break of structure again to uh, go off of it. On the 1 minute time frame, it would have broken structure around here, even though on the 30 minute it doesn't break until all the way down here. Um, once again, there's really no clear take profit, so I would have to do a 1 to 1.5 fixed risk to reward ratio. I don't know if that's a perfect risk to reward ratio. I might refine that a little bit, but just because I don't know for sure, 0.5% account risk once again. This one was really interesting because I found or one trade that was maybe more of a swing trade and one trade that was sort of a day trade. So here I found for one of them, price is in a general downtrend, as you can see if I scroll out. Um, Clear liquidity sweep, price goes up. Here's this order block that it goes into. Price goes down, rallies back into this order block, and then which is also within equilibrium. Just wait for a break of structure after that, which would have been around here when it officially breaks structure. And then um, I could target this area of liquidity right here. So that would be a 3 to 1 risk to reward ratio, or actually 4 to 1, as you can see. So because there's so many confluences here, and even though it doesn't have fair value gaps, I'm sure there's one within here that I could have found an entry off of. Maybe this one. This I would have risked 1% of my account on. Um, Smaller one is pretty similar. It also has the daily bias and it's within a liquidity sweep, so I know that it's got even more confluence to shift to the down the downside. Um, order block I drew with green outline so you could see order block price rallies back into. It also has a fair value gap, and I know I usually don't trade fair value gaps, but since I found one that was also within equilibrium, I just thought it would be a really good idea to that I could have taken that trade and it would have been a really good idea. So I could have gotten up to a 4 to 1 or 3 to 1 risk reward ratio. I think I would have gone down here or even down here. I could have set it way lower actually. Still have a bit of a soft stomach, but I could have had like a 5 or 6 risk reward ratio if I had gone all the way down here. Um, oh, it's still 3 to 1. That's still pretty high. And because I had all the confluences and everything was just clicking for this trade, I probably would have taken a 4 to 1 or a 1% risk at least. And if I had allowed myself in sort of my general strategy to take 1.5% or 2% risks, this would be the one to do it. I don't want to take that yet because I'm still extremely unprofitable and still a beginner trader. So I wouldn't want to risk more than 1% of my account per trade. But if I had to risk more on one of these trades, this would be the one. Finally, I think this is just the last one. Um, this one seems to be pretty standard. We have a basic liquidity sweep, break structure to the downside, and then price retraces back into this liquidity sweep. I believe this order block is just barely got outwicked, so it's invalid. But if it was valid, it probably would have been a much better trade to take it, or it would have been much better to take a higher risk trade off of. It's in a bit of a downtrend as well, so we have daily bias. It's not perfect for daily bias, but for back testing, I think that it's pretty good. It's also within equilibrium here as it's within the order block, but because there's no apparent fair value gap, it would have just been a 0% risk, and there really is no good take profit. So I would have just done 1 to 1.5. Right here is where I believe I zoomed down on a smaller time frame and it broke structure to the downside. It might be all the way down here. I'm not entirely sure. But either way, it would have been a 1 to 1.5 risk to reward ratio, and it would have eventually hit much more than that. So I believe that's everything. Um, I also took this one trade, which I'm going to do the recap for in just a moment. This was a pretty terrible trade, and uh, I'm getting better at trading, but this just was not it.